Hi, this is Kerry Artak with Wicked Stocks bringing you an update in the TLT. The TLT is the iShares 20 plus year Treasury Bond ETF. I did record this video, by the way, on Monday, July 14th, 2025. In terms of the TLT, it is an ETF that really it seeks to track the ICE U.S. Treasury Bond 20 plus year index, if I said that right. Which is an index that holds U.S. Treasury bonds with maturities greater than 20 years. So this is really, like trading the long bond, the long U.S. Treasury bond. You have the 30-year Treasury bond, of course. So this is 20 years plus. It's a great representation of longer-term interest rates. These are government bonds only. There's no municipal or corporate, any other bonds other than U.S. Treasury bonds. So this is a great view of the long bond. I don't think I'm going to say that any more than what I just did. 89.67. If you've been following my updates for the last few years, this is a 5-year descending channel top that comes off that record high COVID low in the interest rates. So interest rates have been on a steady upward path since then. Sometimes they've accelerated, as you can see here from November of 21 to October of 22. This actually coincided with the bear market in the stock market, if you recall. So as interest rates continue to climb, accelerated climb, you had a stock market that continued to sell off. That kind of underscores the sensitivity of the stock market to interest rates. So really since October of 23, and we have yet to retest this low, by the way, and that is 82.74. We've been in this sort of two-sided, I don't want to call it a congestive framework, because congestion is typically something like in this vicinity here. This has just been, we've had these like 2 to 3 month rallies, 2 to 3 month descent in interest rates, a 2 to 3 month sell-off where interest rates then climbed, et cetera, all the way across. We have tested this 5-year channel top, and that was back in March and fell away. 89.67 is our price ceiling through the rest of the year and into next, and below which a 5-year bear trend continues in this entity. In other words, a 5-year uptrend continues in longer term interest rates. If we can close above 89.67, that's another story altogether, which I'll get to in a moment. But, over the last, since October of 23, so we're closing on 2 years here in the next few months, 89.23, there is a channel base that we actually also tested, and we fell to within 1% of in January. Again in April. We actually tested it outright in May. We took it out. We tested the 1% zone. On line studies, channel structures, speed lines that exceed 6 months, I always like to employ a 1% violation threshold on really the signals that could occur if we were to close this week below 84.95. If we were to close below 84.95, we would have a long-term sell signal.
If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and NVIDIA, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity. Try it all free for 5 days. Cancel at any time.
In the long bond, essentially, which would indicate higher rates as we move through the rest of the year. Now, the slippage factor, the 1%, is 84.10. So it really is a settlement this week, Friday, in the TLT at 84.10 or lower. That would be the clear-cut violation of this nearly 2-year channel bottom. Until then, as I've been saying for months, we could fill this wedge out. We could bottom out at 84.95, which we're very close to testing last week. Another within 1% of testing it, and round back up into the upper 80s. We could fill this wedge out for the next month or so before the market then would have to tip its hand in one direction or another. And given the longer term scope of the 89.67 formation, odds just technically, not economically, but technically favor a violation of the downside, because the upside is longer term in scope and therefore stronger. There's a stronger force behind 89.67. Now, it's not inevitable. I'm just saying that the likelier skew is to the downside, that we get that sell signal 84.10 or lower. I don't know about this week, but perhaps over the next couple of months. And if so, we then enter a meaningful sell signal for the long bond. And what I would anticipate, as I've been saying now for many months, would be a full channel extension. I think this is realistic, 67.05. And FYI, a 16.5% move in the TLT is roughly equivalent to 1.25% move in long rates. So to the downside, if we close below 84.10 and we hit 67.05, that's roughly a 21% drop in this entity, which would represent obviously beyond a 1.25% upward move in interest rates. It would probably be more like 1.5 to 1.75% increase. And this could take time. This could take a full year. It could be more accelerated to the downside. Could be within 3 to 5 months. But I do think that the emphasis would remain, in a more, right now we've had this kind of two-sided framework for the last couple of years. I think that comes to an end with a settlement this week at 84.10 or lower, then expecting the upper 60s in the TLT, which would be a 1.5 to 1.75% increase in interest rates over that time frame. Now, on the way down, and I've shown this before too, I'm kind of zooming in on the same exact chart. This is a weekly bar chart. So if we close 84.10, I consider this to be kind of a 2 to 3 month target. Could be sooner, 77.88 and dropping. It'll be dropping into the 76 handle by the middle of August. This is roughly a 10% move to the downside, which if you do the math, and I really haven't, that would be like a 0.75% increase in interest rates within 2 to 3 months or so. And so this is an interesting question. I don't want to get into it with Powell and the Fed and, whether the Fed chairman is swapped out. I can't remember when his term is up. But the drama of the Fed, I do think that if we do, and I know that I'm kind of going out on a limb here, that if we close at 84.10 or lower, the Fed is likely. This scenario then, basically implies that the Fed will continue raising interest rates, or at the very least, not lower them. And that's just kind of the way it plays out. The Fed follows the bond market. It doesn't dictate the market, right? And so, as the bond market, as more sellers come into the market and interest rates then inversely go up, the Fed plays catch up. This is just, it's not just my opinion, but anyway, there you have it. Closing at 84.10 or lower, a 2 to 3 month target at 77.88, and over the next full year, I think the 67.05 would be likely, and that is what I would expect. But we're not there yet, and where we are once again is smack dab in the middle of this wedge. Last thing I'm going to say is that if we were to rally over the next 3 to 5 weeks into the upper 80s, this 89.67 formation, that we could top out here into September, October, and fall away again. And if we were to close above 89.67, that would indicate 102.10. Within, this could be 2 to 3 months, 3 to 5 months, the better part of the year. Once again, with present volatility, the better part of a year. And I haven't done the math, but I'm just guessing that would also be probably a 1.5% reduction in long rates. This scenario, in my opinion, you probably would agree with me that if we closed above this 89.67 formation, we are in a weak economic state, maybe a recessionary environment, wherein interest rate reductions would be, required. And that would take us into this low 100s. This is a 2-year channel structure that by that point in time could contain quarterly, possibly annual highs. And that is all I've got for this particular Wicked Stocks update in the TLT. You have a great day.